Hey Rick, so this is Rick Sorrentino and this is Paul Paquin. Now, Rick has been with Golden Financial Services for over 10 years, and he's on the front line. He's directly helping consumers that call in for help with their debt. So Rick is a debt counselor at Golden Financial, and he's helped thousands of consumers become debt-free through the different programs and just by providing them sound financial advice. And that's why I pulled Rick in for this video. I want to understand his experiences over the last, say, 6 to 12 months, really over the last year. And I'm going to ask Rick some specific questions. And these questions are aimed at helping all of you consumers that are struggling to pay your credit card debt, or maybe you can only afford to pay minimum payments. So yeah, we're going to talk debt relief talk. I know it's a little bit of a boring subject, but again, the point here is to educate and to help people, because credit card companies right now, I mean, they were doing the forbearance and the deferment, but guess what? Student loan forbearance is about to end in September, and credit card companies are already stopping working with their clients on deferment options. So without further ado, again, Rick Sorrentino, and let's start off. I'm going to ask you a few questions here, Rick. So Rick, what is the biggest financial problem you see consumers facing that call in for help with their debt?
I find that the problem that most people fall into is they get into a position where they can only maintain the minimum payments on a credit card. And the problem with that is when you're just making minimum payments on a credit card, it could take you 20 to 30 years to pay the balance off. And that's if you were to put the card away, never use the card during that 20 or 30 year time period, because if you're still using the card, then that time factor goes out the window. So the problem, like I say, is people feel like they're paying their bills, but they're really not. They're just making payments and carrying the debt. There's a big difference there.
Yeah, that makes total sense. Okay, so what is the most popular option for someone that like to go along with what we're saying? They can't afford their credit card payments, or that they're only paying the minimum monthly payments. And these are the people that are calling in. So what is the best option for them? And I know that it's hard to answer in a quick question, but just from your experience in the last.
And as you stated and went on there, there's a bit of a variable there, because it depends upon the state that you live in and the debts themselves that sometimes dictate what can be offered. I mean, the best option, honestly, is what's called the validation program. It's whether it's available or not, but you have validation, settlement, money management. But the one option I find that's best is to try validation, because it still leaves the other doors open. If you don't invalidate a debt, you can still settle a debt. You have those other options to still use, but validating is what I would call the prime option when it's available.
Yeah, least expensive in terms of the total that the consumer will pay in the end, and the program where potentially, well, after the account is invalidated legally, it can no longer remain on their credit report. So what I was saying, potentially the debt can be removed from their credit entirely by the end of the program, which is
it costs you the least amount of money, and in the long run has the least negative effect when everything is said and done.
Yes, sir. I agree with 100% on that one. So what is the difference now that we're talking about the 3 programs that you mentioned? Money management or consumer credit counseling, you've got debt settlement, and then you have debt validation programs. So these are 3 different programs. So what are the differences in these 3 programs? Maybe just a quick summary of each and how they're different.
Well, the money management program basically is the only time I would talk to someone about using a money management program is when they have a low debt amount of $10,000 or less. I mean, wouldn't even consider it if they weren't anywhere near that. Usually it's only even good on amounts of $5,000 or lower. But money management is you're paying the full debt back at a lower interest rate, but you're still getting negative credit. So if you're going to get negative credit, you should get the best savings results out of the process. So that's why it's either debt settlement or debt validation. When you talk about the differences of which one has the best value, you save the most money on debt validation. Debt settlement, most people are comfortable with debt settlement because that's what they're familiar with. And that's really where the issues come in. And what I do here, a lot of people, they're stepping into an area that they're not familiar with or they're comfortable with. They know what debt settlement is, so it's easier to grasp. But there are other options that are better, that if they don't work, you could still use the debt settlement. And that's what the debt validation process is.
Right, like for example, if the debt is proven valid, which is validated, then it could end up being settled in the end. And then if there's like a summons, for example, a lawsuit, if the credit card company sends the consumer a summons, the summons could always end up getting settled. So settlement is kind of like a worst case scenario is how I consider it, right?
Settlement is always exactly. Settlement is the last, like I said, if validation doesn't work, you could then settle the debt. But why jump into settling it when you have the option to validate it first? It's kind of like,
Right.
if you were going to court, you want to be found not guilty. If you're having an issue, you'd rather be found not guilty. And that's what invalidating a debt does. It makes you not guilty. When you're settling a debt, it's basically saying, I'm guilty, please put me on probation and be lenient on me. We try to get you not guilty, invalidated, clear, clean, away from the debt, and give you a fresh start.
That's a great example because it's like when you get a speeding ticket and you're guilty, your insurance goes up. Where with the debt validation program, if you settle the debt, your credit score goes down and it stays down because you end up getting the collections and the late marks on your credit. They don't disappear.
And you could get 1099 on your taxes also. You could pay taxes on the difference between how much you settled the debt for and how much you actually owed. So those are the negatives that are associated with settlement. So again, when we can offer validation, we always offer validation first, and then we'll fall on settlement if the validation is not successful. We're 98% successful at getting the debts invalidated.
Last I checked, there was about 9 or 10%, less than 10% of consumers were able to, less than 10% of consumers had to use the debt settlement. So 90% of the consumers right now are getting assistance through the validation. And less than 10% are needing the settlement. Like I said, if there's a summons or if they join the program and maybe already there was a summons in the works. So in some cases they need the settlement, but the validation has been proving to be a much better option over the last year, in my opinion.
As strange as it may sound, is validation kind of works very well for the creditors themselves. I mean, look, they get rid of the debt, they write it off, they sell it to a third party, let it be their headache. The original creditor, they write the they write the debt off as a loss on their taxes, so they get a break. The debts are FDIC insured, so they're collecting something there. And they're getting money from the third party that they're selling the debt to. I mean, what the creditors are losing is the future interest they would have been making. They don't lose any money out of pocket when they sell the debt off when it goes through this process. And that's the thing that people don't understand. They're like, most people are afraid that creditors are going to sue them or come after them legally. That's not always in their best interest for the creditor to do that. It costs them money to proceed. It costs them, it's just not the best way to go.
Oh, that's a great point. That's a great point. So one last question, as we're talking about all these different programs, we want to make sure people know, because a lot of these debt relief and debt settlement companies, they call with one program, debt settlement, and they act like it's the best program in the world. There's going to be no negative effect. It's going to be perfect. And that's just not the case with any program. Consumer credit counseling has its downsides. It's the most expensive. Credit scores can go down. Validation has its downsides over the first year because consumers, they're not current, they're not making payments every month. So there are downsides with validation. With settlement, there are downsides, but in your opinion, I'm going to ask you, what are just one downside, the worst downside on each program? Could you just tell me that? In your opinion, the worst downside?
The one downside to every program is it negatively affects your credit. No matter what anybody says to you, your credit is going to be negatively affected. It's how severe is the effect going to be. Very honestly, the least severe is consumer credit counseling. It's designed to be that way. But then again, it only works on the lower debt amounts. When you're over $10,000 of debt, when you look at the numbers, it just doesn't make sense. It could take you 5 years to pay the debt off. So you're getting negative credit for the 5 years, whereas any other program, you'd be done in 2 to 3 years. So for the 2 years that you'd still be in the management program, you'd be reestablishing yourself for that 2 years. So that's where the benefit is. And I hope I don't lose you when I say that.
That's a great point. I mean, that's the thing. 4.5, 5 year program versus a 3-year program. And you're paying so much more with the consumer credit counseling. And it's all because what? Because you want to be able to say you remain current on payments. And that's a big benefit of consumer credit counseling, but the
But it did it for
downside,
5 years, but it kept you current on those payments for 5 years, which means you were in a program for 5 years. Whereas if you finish one of the other options in 3 years, for the 2 years longer that you'd be in that consumer credit counseling program, you'd be reestablishing yourself. And that monthly payment that you'd be making on consumer credit counseling for the next 2 years, you could be putting that money in your bank account. That's the big
Right.
difference. So you're building up your own reserves. People make the mistake of thinking of credit as an asset. Credit is not as much of an asset as it really is a liability. And that's the problem that people make these days. They think when they're going to have a problem, there's an issue that they can rely upon the credit as for emergencies. That's just saying that when you have a problem, you're going to dig a bigger hole for that problem when you're looking at it that way. If you're saving your own money and have money in a bank account and you have an emergency, you're using your funds. You're not digging a deeper hole. You might be using your reserves, but it's not creating a larger problem. And that's what people don't realize. When you borrow to solve a problem, you're just making it a bigger problem. At the moment, it feels good, but down the road, you're just digging a deeper hole.
yeah, absolutely. Rick, I'd like to, we want to give these people, whoever needs help with credit card debt, if they need advice, if they would like a free consultation, how can they reach you, Rick? What's your direct number?
Well, my direct line toll free is 888-392-8608. They can always call the main number to the company. I'm willing to do Zoom calls, whatever's necessary. And I know sometimes there's a comfort zone involved, so that's why I'm offering something like that. Most people call in and look to come into an office, and I tell them, we can't be everywhere. I mean, that's really what the problem is. For us to have an office, we'd have to have an office in every city, every state. You'd have to have hundreds, thousands of offices to physically see people. So
Yeah.
I'm sorry we can't be everywhere, but we can do something like this to try and make it as personal as possible.
Yeah, it's great. And if you want to check out the website, you can go to www.goldenfs.org. Again, Rick Sorrentino, this is Paul Paquin. We're from Golden Financial Services, and we hope you enjoyed this little YouTube video. Have a great day, everyone.